We have a great panel. We're going to talk about a somewhat controversial topic, market concentration, but I think this should be very, very lively. We have a great panel. We're going to start with Javier Blas, who's the Bloomberg opinion columnist. Javier has a long journalistic background, did great work when he was at the Financial Times, covered the, many of you remember following all the work he did covering the food price crisis. He's written a great book, Merchants of Grain, many of you know, was written several years ago by Dan Morgan. Great book. This is one I would highly recommend as well that Javier's just come out with, called The World for Sale. We'll then turn to Swithin Still, who is a founder of Still Grain. He's a keen observer on markets. Again, if you haven't followed him in the past, he's on Twitter. You should. He has just great experience and really good insights on what's going on in the grain trade. Swithin will be followed by Jim McDonald, who is a research professor at the Department of Ag and Resource Economics at the University of Maryland. But before that, he was with the Economic Research Service at USDA, where he has written extensively on competition, agricultural industries. And he's been a liaison between USDA and the Department of Justice on merger cases in agribusiness. And then lastly, our new analyst, fertilizer analyst at AMIS, Delphine Lecomte-Demarcy, joins us after about 10 years in the work in the agricultural commodity sector, where she's done consulting on fertilizer trade and risk management. We're very, very happy to have her at AMIS and also to have her on this panel, where she's going to talk about some of the regional concentration issues in the fertilizer industry. Okay, so I know we're running late, so I'm going to jump right to Javier, let him go, and then we will have a question and answer period at the end with my good colleague Seth Meyer, who's the USDA chief economist and chair of AMIS. Thanks.
Thank you so much, Joe. I cannot believe that it's more than 15 years, perhaps 17 years, that you and I started talking when prices were starting to go up in 2007 with wheat and corn prices and on the first of what we call the food crisis and that roller coaster that we have had in agricultural commodity markets since. As Joe said, I am a Bloomberg opinion columnist, but today the comments I will be making are only mine. So that's my disclaimer. I'm going to try to be brief on a kind of a 30,000 feet overview of agricultural commodity trading and concentration, because I think that the most interesting bit will be use the Q&A later with Seth Meyer and everyone else who is just watching this panel online. So when we look at the agricultural sector, you know, what we see on commodity trading, and here I'm thinking about physical commodity trading rather than trading in derivatives markets. That's more the realm of Wall Street and hedge funds. Well, a lot of the discussion today on concentration on agricultural commodity trading is coming because two of the biggest players of the industry have proposed to merge. So that has prompted everyone to look at the sector a bit more closely. It's a sector that usually doesn't attract many headlines unless something goes very wrong in the world of food supply, but now there is a bit more of interest. So when we look at this world of agricultural commodity trading, we find that there are 6 companies globally that dominate the trade in jurisdiction, in multiple origination and destination markets, and also across multiple agricultural commodities. That's wheat, corn, soybeans in particular. The first of those 6 companies are 4 companies that we group into a moniker that is called the ABCD for the initials of ADM, Bunge, Cargill, and Louis Dreyfus. That's a bit of a very convenient for journalists like me to use ABCD. Fantastic headline, but it's a bit misleading. It's not the whole of the sector, and also The A has changed over time. If we have looked 20 years ago, the A was Andre, a company that later went belly up, went bankrupt, but it was a big agricultural commodity trader based in Lausanne in Switzerland. And the C in reality were two companies. The most powerful for many years was actually Continental, whose global trading business later was bought by another C, Cargill, under the current status of the ABCD. There are two other companies that they are very important. So that's what I said, 6 global companies dominate. Those are Glencore, Viterra, Glencore Agriculture, later rebranded as Viterra, and also COFCO, a Chinese-owned company owned by the government of China, which consolidated a number of trading operations and processing operations, both domestically and internationally, owned by COFCO and a number of other Chinese state-owned companies, including some of them managing the agricultural commodity reserves of the government of China, and more lately, over the last few years, both also international commodity traders to create a big global commodity trading operation. So those are the kind of the 6 big companies: ADM, Bunge, Cargill, Dreyfus, Viterra, Glencore, and COFCO. On top of that, we have a number of other companies that operate more regionally or even nationally. We have a number of Russian companies which are becoming even more important after the war in the invasion of Ukraine by Russia, because Russia is expelling the international traders from his territory. Those Russian commodity traders are really crucial for a big chunk of the global wheat trade. We have a number of companies originating commodities, agricultural commodities in Latin America, particularly in Brazil, which have developed a bit of a global reach, also very important. And we have a number of Japanese trading houses, or the Shogo Shosha, which have significant agricultural trading operations, particularly in North America, but that mostly do serve as a conduit to fill the short position of Japan as a whole in the agricultural market, and they have limited kind of third-party trading operation. Those are the big actors of this market, but as I said, a lot of it is concentrated in the hands of 6 companies. Interestingly, we are thinking about this concentration, and immediately the idea comes, are we regulating well this sector? Well, this sector is largely unregulated, but before we discuss whether there is a need for less concentration or even there is a need for more regulation in the sector, I will say one thing in particular, and is that before we regulate and we think about doing any intervention, the first step is to have better data. I think that one of the biggest problems in the market is that we know very little about agricultural commodity trading. Some of the companies that I mentioned are either owned by families, privately owned, or owned by governments. They disclose very little information. In some cases, we don't even know their P&L, their profitability. We don't know how much tons trade every year from where and to where. Many countries disclose very little data of their exports, certainly not timely. It's very rare to enjoy the timeless of the US DA reporting system, which, by the way, is about to celebrate a 50th anniversary with the in many places, getting data that is less than 3 months old is almost impossible. And it's a sector that every time that regulators or international organizations have taken a look, have been surprised about how little oversight and how little regulation there is. As recent as April this year, the International Monetary Fund took a look at commodity trading. They were in particular looking at energy, but it can be applied across the sector. And their conclusion was that some very large commodity traders are private companies, that they are subject to only very limited or no public reporting requirements at all. And when the European Central Bank on his financial stability review took also a look at the sector, he concluded that commodity traders have largely escaped regulatory scrutiny in the European Union. I am here talking about physical trading. Ironically, we regulate quite tightly the derivatives market, which is the secondary market, but the physical market is largely unregulated. Final point, why we are more interested than ever on concentration and regulation of the sector. Well, it's because two of those 6 companies have proposed that 2 of the 6 companies that dominate the market have proposed to merge. That's Bunge and Viterra, as we discussed earlier. That's the name of the Glencore agricultural trading arm. And that's an important merger because it will create the 2nd largest agricultural commodity trader by revenue. And also in reality, although it looks like in effect a combination of 2 companies, is a combination of 4 companies in a very short period, because initially Glencore bought Viterra in 2012, then renamed itself as Viterra, went to buy Gavilon, which was a significant trader in North America in particular, owned by a Japanese trading house, and now is proposing a merger with Bunge. So it's not to look just this as 1 + 1, 2, but in reality it's 4 companies joining together. And I am gonna just stop there, and I think that it's best if others speak, and then we have a conversation and a Q&A, and I welcome your questions, and I really thank Joe and Seth Meyer for having me here today. Thank you.
Let me turn to our next panelist, Swithin Still. Swithin, you're on.
Hi, Joe. Thanks for inviting me, and I hope you can all see me. I'll take my glasses off because I don't need to read anything. I was really enjoying the talk by Javier. I have experience at the coalface of physical commodity trading. And whilst I understand that a lot of the regulators would like to regulate the physical commodity trade, those involved in the physical commodity trade, like myself, like the opacity, the opaqueness of the physical commodity trade. So I think that a lot of commodity traders will welcome some transparency, but others will prefer to live in the shadows, which is incidentally the title of a book by my friend Jonathan Kingsman, Out of the Shadows, The New Merchants of Grain. He wrote a fascinating pseudo-sequel to The Merchants of Grain by Dan Morgan, which was published back in '79, which talks about the ABCDs, which Javier mentioned, some of whom he mentions in his book, which is also excellent. Highly recommend it. World for Sale. Yeah, so the ABCDs or the ABCCDs or whatever you want to call them now, they're being shaken up once again, as Javier mentioned, with the merger of Bunge and Viterra. Is it a merger? Is it a takeover by Bunge? I think that's a moot point. I think that there's a lot of work to be done with the various monopolies and mergers commissions in the various countries where both are operating, because they have a dominant position in soybeans, corn, wheat, processing facilities, oilseed crushing in Brazil, Canada, Australia, and then a rhetorical question is why there is only one Monopolies and Mergers Commission. That's rather ironic. I digress. Going through to talk about the impact of this merger, I think that there will be serious impacts, and I think that there will be some consolidation in the market as a result. I think there's obviously some overlap between the two companies. Bunge is based here in Geneva. I'm based in Morges, which is about half an hour outside of Geneva, near Lausanne. Viterra, their grain desk is in Holland, near Rotterdam, but they trade out of a small office in Bar, which is near Zurich. It's going to be interesting to see how that all pans out with the various sales of assets, which will be necessitated. I think that ADM and Cargill will pick up some assets along the way. I'd like also to briefly talk about the consolidation in the Russian grain market, because as we've all seen since a few years now, there's been a serious move by Russia to consolidate their grain market. All of the multinationals in June, July this year, they've essentially stopped trading in Russia. So they no longer have origination. I believe that Cargill still has 25% share of one of the port silos in Novorossiysk, the KSK silo. Bunge withdrew last year. ADM had, I believe, a partnership with a company called Artis, but that I think has fizzled out. And so basically you're left now with essentially Russian-linked trading companies who are in charge of the grain market. And you've had recent news that the second largest oilseed crusher, Yugorusi, is going to be taken over by the former Minister of Agriculture, Mr. Kachov. So you've got the leading grain exporter, Торговый дом Риф, which is trading through a Dubai domiciled company called Grain Flour, formerly known as GTCS. They've been the largest exporter for the last 10 years. They move 7 million, 8 million tons every year, mostly out of Kavkaz, where they have floating crane facilities. I understand that they are trying to sell these assets at the moment. Let's see if there's yet more consolidation in the market as a result of that soon. I would not exclude it. In fact, if I was a betting man, which I am, I think that the assets of Торговый дом Риф will probably change hands in the next 6 to 12 months. The other major players are all assets rich, so they all have assets like Aston, also out of Kavkaz, major oilseed crusher out of Russia. We have obviously Viterra Group, which was recently sold, allegedly, although I think that the truth is more prosaic. I think that VTB still has some sort of an influence over this company. They've renamed Viterra Holding as Grain Gates, but the people behind remain the same. There's a former Dreyfus guy who's in charge of that, Ilya Aliyev. And they trade through Solaris Commodities, basically, which I ran from 2012 until 2020, when I was ousted by the new owners 3 years ago. So that was a fun ride. I was described by Reuters as a veteran trader, which I didn't like very much. I'm not that old, but maybe I am. And yeah, so I've set up my own company in the meantime. I'm still involved in the Russian and Black Sea market. So if you want to reach out to me, have any other questions that I might be more comfortable talking about, not on a public webinar, I would be more than happy to hear you, and you can reach out to me on LinkedIn or other platforms. I can neither confirm nor deny that I am on Twitter, despite the kind introduction from Mr. Joe Glauber. Maybe I am, maybe I'm not, but I'm not going to confirm or deny that I am. I think that's about it, really. I'm around, so I let the mic pass to Seth Mayer, who I had the honor of sharing a stage with recently. So I'll pass it back to you, Joe, and then back to Seth. And if you have any questions, I'm here. Can't hear you.
We certainly will on Q&A. I think we certainly will.
Yeah, no, we will definitely be back with you. Great.
Okay.
Okay, so with that, let me change just for a moment, and we're going to move over to the seed industry, and I'm going to sorry, I keep losing my audio. I'll bring Jim McDonald up, and Jim, take it away.
All right, thanks, Joe. Joe asked me to talk about seeds. So what I decided to do is talk about the big mergers several years ago, because all of the issues in those mergers, all the competitive issues, are still relevant for seeds and for any research-intensive agri-food industry. Next slide, please. So just to remind you, in a short period of time, mostly in 2016, and then playing out over the next several years, 3 major mergers were announced. Bayer acquired Monsanto, Dow and DuPont merged and then split off their agricultural business into Corteva, and ChemChina acquired Syngenta. So in that series of acquisitions and mergers, the world's 6 largest seed and agrochemical firms would combine into 4: Bayer, Corteva, ChemChina, and BASF. Next slide, please. So this was a major antitrust investigation, both in the United States, in the EU, but also in Brazil, in India, in Canada. I'm going to focus on the US. The issues that arose in the US investigation were very similar to the issues that arose in the EU. I'll keep it short and keep on the US. US antitrust laws prohibit mergers that, in the language of the laws, may substantially lessen competition. Now, like most US laws, that's very general. The specifics are left up to the enforcement agencies and the courts to decide what exactly that means and what the triggers will be. For enforcement agencies in the United States, there are 2 big issues in any kind of merger, and in this merger in particular. First, will the merger lead to higher prices for seed and chemical products? That is the standard sort of monopoly or monopoly power question. But in addition, in this merger, at least as important, was the question of whether the merger would lead to reduced competition in innovation, and through less research investment as a result of the merger, and fewer innovations in the future. So these were the 2 big issues that came up and will come up in any merger in a research-oriented industry. Next slide, please. Just to give you an idea of some of the markets that were of concern, but also the measures of concentration for those markets. As part of the investigation, the Department of Justice in the United States was able to subpoena information from the relevant companies. And in the documents that they released as part of the investigation, they released a good deal of information on market shares held by each firm in different markets. And what I've done is combine them to give you the estimate combined Bayer Monsanto market share in several markets. Now, what we would have initially thought of, and what was really important in the merger, was genetically engineered seeds, and in particular in cotton. They were the 2 major producers, or in many cases, the only producers of some types of GE traits, as well as GE cotton seeds. You can see estimated market shares were extremely high, near monopoly there. But there are other markets as well. If you look over on the right, vegetables and melon seeds, those would also be highly concentrated as a result of the merger of these 2 firms. And there were several other markets of concern. Canola seeds, what we might call, what are called in the documents, foundational herbicides, as well as seed treatments. So a key thing here is, in that investigation, the focus was on highly concentrated markets. That is 1 to 4 competitors, really. And it remains true through much of the industry that many seed and chemical markets are highly concentrated, with just a very few rivals. Next slide, please. Okay, to focus on some details, to think about competition and prices. That is, when do we think a merger is likely to lead to more market power and higher prices? Well, concentration matters, of course. Will this merger leave us with 2 competitors instead of 3? That is what we call a 3-to-2 merger. Will it leave us with 3 instead of 4, or will it leave us with 8 instead of 9? And concentration matters here. We think it's more likely at higher levels of concentration that a merger is going to lead to the exercise of market power. But that's not the only issue in an investigation. Further question is, are they going to be able to exercise that market power? And as we list through here, competition among product types matter. Are there, for example, in agrochemicals, competing herbicides with different modes that buyers may be able to switch to? But that also leads to a further issue. How easy is it for buyers to switch, to perceive that there's a competing product out there and to shift over? That type of question arises in any merger investigation. In addition, the ease of entry matters. If a merger combines the only two rivals and they raise price, how likely is it that another firm would be able to enter that market? In these investigations, low concentration, easy entry, ease of buyer switching and substitute products will limit the opportunity to raise price and make it more likely the merger would not be opposed. Next slide, please. Innovation issues are trickier with a lot less data. There's an opposing question. Will a merger actually enhance the ability to innovate? Perhaps by combining complementary research organizations or by providing the size and scale needed for some types of research projects. That was certainly the view in the merger wave in seeds and agrochemicals in the 1990s and 2000s, although it should be said it was a much less concentrated industry back then. Alternatively, will a merger reduce the incentive to innovate? And what we do here is start with the extreme. Suppose there's only two rivals in an industry and they merge. In this case, your research leading to new products will only cannibalize your own sales. You will have a weaker incentive to invest in research in that case, as compared to the case where you may have 4 or 5 rivals where your new product will largely take sales away from them. So in that instance, in a highly concentrated industry with very few rivals, there may be much weaker incentives to invest in research. And this is a core issue in these types of merger investigations. For the economists out there, this is often framed as Schumpeter, mergers and concentration enhancing the ability to innovate, versus Arrow, Kenneth Arrow, mergers to monopoly, cannibalizing sales and providing weaker incentives to innovate. All right, next slide, please. Innovation issues are of growing importance in antitrust enforcement in the United States. 20 years ago, it was very rare to see innovation as an issue in a merger investigation. It's been growing, though. Most food system merger cases are still only focused on pricing, not on innovation. Currently, Albertsons and Kroger, the proposed merger between 2 very large supermarket chains, that's about pricing. Cargill, Continental Grain 20 years ago, that was about pricing and whether they would be able to reduce prices paid for grains in the United States to farmers. JBS National Beef, a proposed meatpacking merger, that was also focused on pricing for cattle and for beef. But innovation plays a big role, much bigger role now. It started with the precision planting case. Monsanto and Deere each had divisions that produced high-speed planters. DOJ showed that there was a lot of innovation largely growing from the rivalry. That led into a much bigger focus in the seed agrochemical mergers. Next slide, please. As we know, the mergers proceeded subject to several significant divestitures. Next slide, please. Now, what are the big issues out of this? First, many seed, ag, chemical, and equipment markets are highly concentrated with very few rivals. So these issues remain in any of these industries. Second, there's a series of issues for the economics of competition and antitrust policy. One, when does high concentration reduce research incentives and investments? Second, when the mergers actually lead to price increases, that's a continuing argument within the field. Third, and this is a big issue in US policy and among academics in the last 6 to 7 years, is our current policy too lenient? And then finally, underneath all this, we do use divestitures a lot as a remedy. Does that actually work? All of these are still open to considerable amounts of research and discussion. That's what I have to say, and thank you. I'm happy to talk more later in discussion.
Great, Jim. Thanks so much. That was incredibly useful, because I think it does give as you say, these are similar questions that are asked by other regulatory bodies, I think, and I think this was just a great way of kind of going through it. Let's turn to the fertilizer market for our last speaker, Delphine, please.
Hi, thank you. Well, I will be talking about fertilizer markets, if you can be sharing the slides. I will start by giving just an overview of what fertilizers are. So if we can go to the next slides, just to make sure we're all on the same page. I don't know how familiar the audience would be with fertilizers, but in any case, a lot of the topics that have been covered by my previous panelists are something that we can definitely relate to in the fertilizer industry. So fertilizers, we're talking about the nutrients, well, mineral fertilizers, we're talking about the nutrients that we would be bringing to the soil to replace the nutrients that were removed from previous crops. And at global scale, fertilizers are being used for a variety of crops, but maize, wheat, and rice would be making, just for those 3 food crops, half of fertilizer uses. We also commonly assume that fertilizer is responsible for half of food production at global level. So that's the implication for food security that we're gonna need to keep in mind for the rest of the presentation. Here I'll be focusing on nitrogen, phosphates, and potash fertilizers, because they are the main nutrients. We're bringing in bigger quantities to the crops, but there are a lot of other fertilizers that we could consider. So how do we characterize market concentration on fertilizers? Moving to the next slide, you will see that I've been looking at the number of countries who account for 90% of production. When you're looking at wheat and maize, you have 15 or 16 countries responsible for those grain productions. In the case of nitrogen, using urea as a nitrogen product, we're having the same or similar level of concentration as the one we would be having on the grain industry. On the other hand, for phosphates and potash fertilizer types, we're having way more concentrated markets, with only 6 and 5 countries making up for 90% of the production. We're talking production here, but trade would be similar numbers. Another way to look at market concentration would be displayed in the next slide, with a distribution of fertilizer countries responsible for, well, countries responsible for fertilizer supply. You're having nitrogen with 3 main countries, China, India, and Russia, responsible for half of urea supply. But then you have a whole bunch of countries with significant contribution to urea supply to the world markets. This is because nitrogen is captured from the air. So virtually any country could be a player of nitrogen fertilizer production, except you also need to have an access to a reliable source of energy to be able to transform nitrogen from the air to a urea granule to be applied by the farmer. So all those countries with potential and access to energy resources could be also displayed in the nitrogen production front. However, when you're looking at phosphates and potash markets, as we said earlier, seem a lot more concentrated, well, you'll be relying on the availability on your territory of either phosphate rock for the production of phosphate fertilizers or potash salt for the production of potash fertilizers. And world is made in such a way that the resources are very unevenly distributed. So for phosphates production, China, Morocco, and the US together make 3/4 of the supply. And for potash, Canada, Russia, and Belarus would be making up to 80% of the supply. If we translate that into company names, and I'll be switching to the next slide, I've displayed here a list of the main fertilizer players for nitrogen, phosphates, and potash market segments. I don't know how familiar you would be with those names, but let's make just a few references to revenues last year. Nutrien in 2022 had revenues of $38 billion US. For Yara, for another instance, we are talking about $24 billion US. I'm citing those. Only a few of those companies would have data which are published because they would be publicly listed. So now I'm, thinking about what my previous colleagues were mentioning. We're missing a lot of information also on the fertilizer industry. We don't have that much light on what's going on the volumes, on the trends for all of these companies. Some of them are publicly listed, others are state-owned, others are privately owned. So there is a lot of disparities on the information we would get on those different players. What we can easily know, though, is where those companies are based, and their headquarter locations here reflect pretty well the countries that we've been seeing in the previous slide. But this hides the global presence of most of these players. If you take Yara, for instance, as mainly a nitrogen producer, they would be present in 60 countries with offices and distributing their products around 150 countries. So major players with global presence, not easy either to read their results or their activity, because some of them are present specifically in one segment, others are present in different segments. There is a long history of mergers and acquisitions in between different of those companies. So we're having also quite a concentrated market in terms of industrial players with a lot of power, and also, last but not least, pretty reasonable margin levels as compared to what we would have in the grain industry. If we move on to the next slide, I've just represented here the price trends in the first chart for nitrogen, phosphates, and potash pricing since 2010. And below that, you have levels of volatility. What we can say from the first chart is that even if those markets have different supply patterns, they still all evolve with similar, or at least comparable price trends over the years, and they are linked to other commodities, either on the raw material side or on the demand side with agricultural commodity pricing. But what differs is the level of volatility we would be observing on those markets. In the below chart, you have price volatility for urea as a proxy for nitrogen in green color, and we're seeing that the levels of volatility have been very high over the last few years. In the case of potash, in red line, so the most concentrated of all those fertilizer markets that I've been mentioning, the volatility has been pretty low over the last 10 to 15 years, owing to having very little amount of suppliers, with some peaks, because when you have potash coming out of Russia, Belarus, and Canada, only one supply issue can have a lot of impacts on the availability of products. But looking at the last few years, we're seeing that the patterns, not only in terms of pricing, but also in terms of volatility, are evolving because of the geopolitical context, because of COVID, logistic issues, etc. So looking at market concentration is definitely one important aspect for understanding fertilizer markets. But there are a lot of other complications or implications that make things way more complex to interpret. So I'll move to the next and last slide, where I'm just dropping some information to understand fertilizers in a broader context. When you have different markets, because within fertilizers between nitrogen, phosphates, and potash, we're talking different supply patterns, but we're also talking about different demand patterns, with nitrogen being way more widely used than the other two types of fertilizers at global scale, with an elasticity to price which is way smaller for nitrogen than it is for phosphates and potash. We've seen that in 2022, phosphates and potash uses decreased way more than they did for nitrogen in a context of very high fertilizer prices. Then you also have different implications depending on the crops you would be growing. If you're a farmer growing soybean, the impact of nitrogen market concentration is very limited because you don't need to be applying nitrogen to this crop, which can capture it from the air by itself. And you also have different countries facing different realities based on their reliance on fertilizers because of historical reasons, logistical reasons, or because environmental pressures would make the pattern of use evolve in the future. So I'll be happy to be discussing all those topics on top of market concentration. In the meantime, thank you very much for your attention.
Great, Delphine, thanks so much. Very, very useful. Very, I think we'll have opportunity to get a little more into some of this in the Q&As, which we're now going to turn. I'm going to bring in Seth Meyer. Seth, turn on that camera. So we don't have much time, Seth. We got roughly a half hour, a lot of material to cover. Just the idea, if you can comment on the actual requirements, potential requirements for reporting of things like export sales.
I mean, what I would say is I would love that if we have something similar to the export sales that the USDA puts daily when there is a big deal or weekly in other jurisdictions, but we don't have it. And yes, that will increase transparency. I think that is ironic that we have a lot more transparency and a lot more requirements for the financial market, which is, as his name says, a derivatives market, and we have a lot less transparency for the physical market. But yeah, I mean, as Delphine was mentioning, sorry, Benedict was mentioning, we have very little of regulatory bodies or oversight bodies that deal with the physical side of the business. And I think that, to me, on the debate, do we need more regulation? Well, the first thing we need is transparency. We need more data. We need data. It's not more data. In many cases, we need just the first of the data. We don't have enough information to know what's going on.
Swithin, you had mentioned that sometimes in your world, less transparency is actually a good thing, and I get that, but it'd be interesting to hear more on that. And I mean, obviously, we do have a lot of price reporting. Things like Egypt does a great job, I think, putting out bids. No, they don't. Okay, good. Go ahead.
Yeah, sorry to shake my finger at you. That was not meant to be. Yeah, okay, so just in regards to your first part of the question, physical traders like working in the darkness if possible. That's one of the reasons why Cargill has remained a privately owned company. That's one of the reasons why Dreyfus has toyed with the idea of going public and has had a lot of issues with the path that they've taken, getting invested in sovereign wealth funds, etc., etc. So there are, like everything, you know, swings and roundabouts, good things and bad things about going public. Viterra, I think they played their hand very well. Glencore, when they sold off their agri division. My compatriot Chris Mahoney, I think, did a fantastic job. Yeah, so we don't like, I mean, I'm speaking broadly, as a physical trader, be it in grain, be it in mining, be it in oil, whatever, doesn't matter, sugar, cocoa, you name it. The preference is to be able to leverage your knowledge to be able to buy and sell better. At the end of the day, it's very simple. You're moving product from an area of surplus to an area of deficit. What we do is very simple. What a trader is aiming to do is earn a margin on the transaction, be it sell or buy, and you're transforming in time and space something that you've bought. Okay, so you're adding value along the way. You're buying it inland somewhere, or you're buying FOB from a supplier. You're then transporting it by ship in bulk or in containers. And along the way, you're trying to add value and you're trying to make a margin. Okay, we're not here to feed the world for free. We're not charities. But what we do is we do feed the world. We do it very efficiently. And the margins that we're talking about are actually very small. So a lot of the people who have no clue about the market that we're involved in, I introduce myself, I say I'm a trader, I'm proud to be a trader. They'll say, oh, you're raping the planet. No, I'm not raping the planet. You know, it's consensual what I'm doing. I'm buying consensually from a buyer, from a seller. I'm selling to a buyer, and I'm just moving product. And actually the margins that we're talking about in grain, they're very small. And if there's any problem along the way, there's demurrage or there's default risk on the sell side, the buy side, it's a complete headache. I mean, I have two hats. I'm also an arbitrator with an association in London called GAFTA. And for the sake of good order, for the record, I'm speaking in a personal capacity. I'm not speaking in any capacity, formal capacity of GAFTA or anything, other than I'm a qualified GAFTA arbitrator. I still like my job, if you like. It's a paid hobby, if you like, because it's always good to learn from your mistakes, but it's much, much cheaper learning from the mistakes of other people. So I see a lot of disputes, and I'm able to pass on that knowledge to the people I work with and say, make sure you do this appropriation in this way, or make sure you write this in your email, because it costs millions of dollars if you do it wrong, and there's a market difference of $40, nothing personal, just business. They will send you in default, and you will have lost a hell of a lot of money because the guy or girl in operations who's, you know, on a relatively meager salary, he had to go home, she had to go home at 5 o'clock, didn't send that message, bang, you're in default. In regards to your second part of the question, GASC is one of the most fantastic benchmarks for pricing wheat in the world. Egypt, as you know, is one of the biggest buyers of wheat in the world, if not the biggest buyer of wheat in the world, between the private sector and the public sector. GASC has public tenders that are normally announced in the evening after the closure of Chicago. Normally when Chicago has closed in the red, down, GASC will come in for a tender. You can normally tell when there's a tender because the Minister of Agriculture or someone in Cairo will say, we have plentiful supply of wheat. We have supply of wheat for X number of months. And then the next day they announce a tender. So they protest too much, a little bit about how well supplied they are. Everyone knows that they're short wheat. They need to buy wheat. They could buy wheat better. I've tried to suggest to them on a number of occasions how they can do that. What they do nowadays is they buy wheat outside of tender. So last tender, no Russian wheat was sold. Why? The Ministry of Agriculture in Russia, in their infinite wisdom, have put an official floor price for tenders, not for private business, but for public tenders. So all of the suppliers of Russian wheat were offering the same price. So they're not just equally intelligent or equally stupid, these people. They were told that you have to offer it at $270 FOB. Whereas, in fact, in private business is being transacted on a cost and freight basis, landed Egypt around $270. So what do GASC do? They have now the authority from the government to buy directly from suppliers. So the supplier still has to be registered. A supplier still has to put up a bid bond, so like a bank guarantee for $400,000. That's the entry ticket for the party, if you can call it a party, GASC tenders. And they've been buying direct. So last week they bought, well, Reuters reported almost 500,000 tons of Russian wheat. I think there was one vessel of Bulgarian wheat. I understand that it was actually more than that, but I can't comment. In any case, it was done outside of tender. The tender terms were 12.5 protein. I understand that the protein might have been less than 12.5, so 11.5 protein. Therefore, okay, you can't compare apples with oranges. You know, there's not like for like. In any case, the price I understand that was reported at least by Reuters, which is incorrect, but anyway, was around $270, whereas the official tender price was $270 FOB without the freight. That's why they didn't sell a kilo in the tender. So GASC does do a good job of being a benchmark, but they don't do a very good job, partly because of the, let's say, market manipulation by the Russian Agricultural Ministry, which is not the fault of Egypt, in fact.
But they in that sale though, they had, I mean, let me, and this kind of gets to this question of, is this really I mean, you know, we've got a title here that says it's concentration in the grain trading industry, a food security issue. So I guess I come back to you and I come back to Javier and say, yeah, but the last GASC bid had like 45 bids with 15 different companies. And kind of distinguishing between this issue that Joe and Javier raised about the difference between physical and financial, seems to me that issues in the physical market are more directly linked to food security. But Javier, Swithin, is this a food security issue? I mean, lots of competition.
110% is a food security issue because, listen, Russia is and has been for the last 10, 12 years, if not more, the largest wheat exporter in the world. They're not the biggest producer, but they are the largest wheat exporter in the world. And I know a little bit about this. I mean, I've been doing this for 20 years. I came to Washington, Seth, as you know. I mean, I gave a whole talk. I've got the certificate of appreciation on my wall from the USDA, thanking me for my time. And I gave a whole speech. You can find it online. Swithin Still USDA. It's all there. I think, I don't know, 50 pages of PDF. If you've got difficulty sleeping, you can read it. No, it's actually quite interesting, but you know, not everyone's interested in Russian wheat statistics. It's incredible though, the turnaround from the largest wheat importer during the Great Grain Robbery to the largest exporter. The turnaround has been absolutely incredible. And it's been to the detriment of the USA. US has, I think, the lowest plantings of wheat in the last 100 years, the last few years, because no one wants to grow wheat anymore. It doesn't really calculate. You know, what people in the Midwest, they want to plant corn and beans. They don't want to be planting wheat. So yeah, I was promoting Russian wheat my whole career. You know, I went to France. I spoke to a bunch of cooperative farmers in France in 2016. Gave this whole speech in French, teasing my French friends, teasing as a sign of affection. And I'm British, so of course I'm going to tease the French, you know. I was saying, guys, wake up and smell the coffee. Russian wheat is coming and going to eat into your market share, into your major markets in French-speaking West Africa. I was already selling Russian wheat to French-speaking West Africa, Senegal, Cote d'Ivoire, Morocco, Algeria. I said, I've got to go. I finished my speech. I've got to go. I'm on a plane to Algeria. Ha, ha, ha. What happened? Who's the biggest shipper of wheat to Algeria now? It's Russia.
This raises a bigger issue as well. I mean, Javier, when you said ABCDs, you said the second C being Costco. I mean, to me, there's a real issue with commercials versus state-owned enterprise, and Swithin calls out Russian export control. But the other side of this is the dominance of the Chinese in the importation market. And one can characterize soybean markets very differently than corn markets into China. One, soybeans is very open and you have a lot of people shipping. And then corn markets are very closed and Costco dominates and can extract the rents from doing so. So I guess should we be thinking about this differently? Are the commercial ABCDs better able to be controlled, and the state-owned enterprise more of a problem for food security?
I think that certainly state-owned companies are going to be more complicated to extract information. I mean, the COFCO is an international commodity trader, but it has two hats. It has that hat of a commercial enterprise driven with traders located in Geneva trading the wall, very similar to what you will expect, say, at Cargill or at Dreyfus. And at the same time, he has another hat, probably a much larger hat, that is making sure that China enjoys food security, that China gets the crops, and that there is a dispute, say, a few years ago between the United States and China, a trade war. COFCO was absolutely crucial on redirecting where China was sourcing a lot of the agricultural commodities from the United States into Latin America, and particularly Brazil. And it has, obviously, COFCO has no interest whatsoever in revealing any information whatsoever of what they are doing. At the same way that I do remember going a few years back into one of the major importers of agricultural commodities and asking a senior official about their elevated stockpiles and the fact that at the same time they were importing. I said, oh, well, you should not really pay any attention whatsoever to what we report to the FAO for our level of stockpiles, because obviously those numbers are not real, they are political. So yes, I mean, states lie on the information that they provide, because this is a very serious business for many of those countries. This is about food security, and therefore, providing extra information may be detrimental. That's why we don't have a system like the USDA with everyone reporting, because it's not about just, we should get more information, not just on the exporting side. I mean, the US does a fantastic job providing all this information about exports, but it will be great to have a lot more information, a lot more clarity on the import side. I mean, I would love to have an information of how much, weekly data on how much really Egypt is buying and from who, and at what price, what China is buying and from whom, how much Japan is importing. But I will give you an example about statistics, and it doesn't come from the agricultural side, it comes from oil. But if you look today at the recent months about how much oil China has bought from Iran, and the official Chinese statistics, custom data, will tell you that it has not bought a single barrel of oil. If you look at how much oil China has bought from Malaysia, it will tell you that it has been buying about 1.5 million barrels a day. And here is the problem. The country only produces about 500,000. So how is it possible that China is buying 3 times the real production? Well, the reality is that those are, counterfeit, smuggled barrels from Iran, and something similar probably happens with the agricultural statistics. You cannot trust some of the data from particular countries. I mean, simply the statistics are not real. They have a political purpose.
Yeah. I think very definitely I know part of the problem that we've struggled with at AMIS, for example, is just trying to get our hands on this sort of data. I mean, stock data is probably the key, but even export data. You look, which the UN system's great, but when countries don't report imports or don't report exports, you're at a loss, and particularly when they're big players. So the fact that Belarus and Russia stopped reporting exports last year has created issues. It's been picked up. The IGC does a great job with the WTO right now, doing real-time exports and shipments. But again, trying to get a handle on this data for market information, so to provide this in a monthly basis or a daily basis or whatever is a challenge. And I think the irony about the COFCO issue is, I think, in one sense, with accession of China to the WTO, one of the things they agreed to was open up some of those quotas to more commercial trade that is not just being dominated by the state-owned enterprises. Unfortunately, when you get things like trade wars going on, what happens then, and even with this so-called phase 1 agreement, is that all of a sudden you're right back into the state-owned enterprises in terms of them controlling the trade. So yeah, it's an issue. Seth, do you want to take it?
Oh yeah, no, and I guess I'd throw one more thing in there and say, it isn't just about food security, Javier. It's also about $50 a metric ton importing millions of metric tons of corn and being able to control the internal price in China for feed corn as well too. So I think that it's a complicated issue for which I think we have to include those state-owned enterprises as being a bit different than the commercials. And
I agree. And when I was saying food security, I was just speaking on a broad term. I just mean, food security, the fact that there has to be the food on the plate, but also what price is that food. I mean, one of the things I will add very briefly is one of the strengths of the ABCD and then, COFCO and Glencore there is that generally they have much better information than everyone else. They are, they employ hundreds of analysts. They have much better data. They have their own weather stations around the world. They usually are ahead. I mean, I know that the USDA and the WASDE system and the board do a fantastic job and is the gold standard of the data. But normally, just generally, the agricultural trading houses are a step ahead of you because they are, they are doing some of the calculations of the global S&D, particularly at times of stress, when there has been a big drought here or there. They are updating those global S&Ds almost on a daily basis and trading on a daily basis based on those updates, where we are getting, USDA information only on a monthly basis.
Yeah, look, I see Swithin has his hand up. Swithin, quick comment from you, because I want to get back to some of the other discussants as well, but please go ahead.
Yeah, thanks, Joe. No, I just wanted to jump in because I think it's important to say that one of the biggest lacunae of the lack of information and transparency on supply and demand statistics indeed comes from the biggest players, the biggest importers and the biggest exporters. China being a notable one. Analysts in China, they don't dare to tell the truth as they know it because they will get in hot water. I think that's a euphemism. I mean, there were analysts who were reporting very interesting statistics on import of soybeans, for example, and other commodities into China. And then they disappeared. They just disappeared. And no one really knew what happened to them, where they went. And it turned out that they had been, they'd been in turn taken away, questioning, why are you sharing this data internationally? Why are you selling this information? It's very sensitive because the Chinese want to have the control over what is reported for food security, for their own food security. They don't want people to know about the state of their corn stocks. They don't even maybe know themselves how much corn they really have and whether it's possible to actually use that corn for feed compounds, for pigs, or whether it's only suitable for burning as biofuel. So it's very, very sensitive.
Yeah.
Likewise, it's a legal requirement for Egypt, I believe, to have at least 5 months, if not 6 months, of wheat supply for food security. So, when the agricultural minister or someone in the government comes out and says, oh, we've got, such and such stock of wheat, well, that's a legal requirement. It's not a, happy days, we've got this. You have to have that. And the key is in the name, General Authority for the Supply of Commodities, GASC. They have to supply the commodities that the country needs. And you're not going to get the data because they don't want you to have the data, because they want to buy better. Every buyer in the world is going to say, oh, I'm comfortable. Oh, don't look at me, I've covered. And then, hey, presto, he hasn't covered. He's lying through his teeth because he wants the market to think that, oh, they're covered, okay, there's no demand there. So he wants the price to come down. But unfortunately, traders aren't that stupid. The buyers who protest too much and say, well, we're covered, chances are they're being disingenuous.
So and part of this is, when I have to go abroad and represent the USDA, sometimes I say, hey, there's responsibilities in exporting countries. The responsibility is to be a reliable supplier and to be transparent. And I think that, when importing countries also protest and say, hey, and think about self-sufficiency or the need for reliable trading partners, I also think they have a certain responsibility. But I'm a markets guy. So I think I want to throw a question out to Jim also in saying, hey, are there functions here? Are there functions of government that you think make a lot of sense, that don't have large, say, negative impacts and might even enhance market transparency? We know traders don't want to share their information, but part of the information that we provide says you get to take advantage of it, but only for so long. And then we level the trading field. Do you have some thoughts about, hey, what are appropriate government regulations? What are the downsides of doing so?
Well, I actually had a different reaction to an earlier comment of yours, but I'll just throw out in terms of providing information. Should we have introduced WASDE? It was certainly easier for private firms to trade before that, as we found out, but I'll leave that aside. Seth's original point was the same one I often have. If we get back to Joe's original question of, should we worry about Bunge and Viterra merging? Geez, when I look at those Egyptian tenders like Seth, I see an awful lot of firms. And I listen to the presentations here, and people always bring up ABCD. And then the experts, people speaking here, tell me, oh, but those letters change over time. It's different companies. So to me, there's a real question for Joe's original point. Do we expect a merger of Bunge Viterra to lead to either lower prices paid to farmers or higher prices charged to importers? And I'm certainly not convinced of that. My original note, so it doesn't look all that concentrated to me. But I could certainly be disabused of that.
Well, here's a quick question for you. I would say, yes, we should have introduced the WASDE, but that's kind of a global playing field leveling. Does the fact that the U.S. do export sales reporting put us at a disadvantage when other countries that emerge like Brazil don't?
I don't think so, but
good.
we don't. Do we report who the exporter is? No, we don't. Because we needed to release confidential data on concentration of exports in the Cargill Continental merger. We provided that to DOJ, and that was important. I don't think we report concentration data. That would be useful to me. I'm not sure how useful it would be to participants in the market.
Joe?
Yeah, look, we're almost out of time. I wanted to come back to Benedict. I mean, not to Benedict, to Delphine, who hasn't had a chance yet. And Delphine, you mentioned this past year, and I think it's been an incredible year in agricultural markets, but also in the fertilizer markets in particular. I mean, you look at energy prices, so all the natural gas, coal, all these things dominating on the nitrogen side. You have two of the major potash producers essentially out of the market for a while. Belarus almost entirely because of sanctions predating the war itself, and then also with Russia's difficulties, particularly in the first few months of the war, exporting potash. And then you have export restrictions from China and others on phosphates. So it's a market that's been roiled a lot. Yet, generally, I guess what I'm asking is, how have the markets worked? It seems to me prices now are down; they're back to pre-war levels. Volatility is still there, but volatility is there in a lot of markets right now. Wheat is at a historic, at least relative to the last 10 years, still at trading with a lot of volatility there. So just interested in your reaction.
Yes, well, I guess volatility, as you were saying, has been visible in a lot of commodity markets. The reality on the fertilizer markets is no different. I just want to take the example you mentioned with the difficulty of getting potash out of Belarus or difficulties to export fertilizers out of Russia, just to illustrate the fact that the market is a lot more resilient than a lot of us would have expected or thought of at the beginning of the crisis, right? So indeed, you're having some major players being out of the market for political reasons or geopolitical reasons, but not all the importing countries would be applying the same kind of sanctions or having the same kind of relationship to countries like Russia or Belarus, for instance. So I don't think we can generalize that, even if it has a huge impact to have Belarus and Russia virtually under sanctions at global level, but you're also having other countries which are huge takers of potash and huge producers of food crops that can still rely on these kind of origins. So it has been a lot of uncertainty, a lot of nervousity on the markets, but at the end of the day, there is no major reason to be worried about global availability of fertilizers at the moment. We're not in a situation where suddenly we're running out of phosphates. It's not the case. We are not running out of those raw materials, at least not in the short term. So it's more a matter of markets being resilient and shifting logistics. And I guess I'll link that to market concentration. You also need to have companies which are flexible and capable of shifting their trade from one place to another and having relationships in different countries and having the logistical capabilities of shifting trade flows from one place to another. So yes, market concentration has some sides which can be criticized, but on the other hand, those players, same as in the grain industry, you mentioned the private players or the industrial players would be the ones who have the best access to information and the best decision to be able to bring those fertilizers from one place to another in the most efficient way.
All right. Unfortunately, everyone, we're going to have to go. This has been great. I apologize for the late start, but this is we're very, very happy that everyone was able to hang with us and get everything. Seth, do you have any final comments?
No, you better not get me started. I'd like to.
Okay. All right. Well, let me thank all the production people at IFPRI